are going to be talking about investing in the metaverse. And more specifically, Roundhill Investment has created a new metaverse ETF. So joining us today, we have myself, Macro108, fellow co-host Steve Pally, and Mario Stefanidis, VP of Research from Roundhill Investments. Welcome, Mario.
Yeah, thanks so much, Joe and Steve. Happy to be on.
Yeah, great to have you. So you're in Greece right now, right?
Yeah, I'm going to be here for 5 or 6 weeks, just taking full advantage of the ability to work remotely. And luckily, my internet is good enough to facilitate stuff like this.
That sounds lovely. Where are you located in Greece specifically?
Yeah, so I'm in the northeastern part, the second biggest city, Thessaloniki. I'm about 30 miles south right now. I'm in our vacation house.
That's awesome, dude. Well, welcome to the show. I'm going to jump right in and start firing questions at you. And my main question is probably the same question that our audience is most interested in: is why now? Why a metaverse ETF? Why do you see this as being an opportunity? And how big do you think the opportunity is this year and going forward?
Yeah, sure. So, it's a great question. And, when you think about the metaverse and the companies responsible for building it, it's still very much in the early innings. But we think that now that all the infrastructure is getting fleshed out for the metaverse, there's really no better time to start covering the sector, to start investing in the companies that are going to be at the forefront of this revolution. And I think Mark Zuckerberg's comments last week that Facebook is going to be creating a dedicated product team for the metaverse was kind of the best possible endorsement we could have, that now was the right time to explore a fund tracking the sector. And you had asked about the market size. So there's a few estimates out there. Bloomberg Intelligence estimates that it's going to be an $800 billion market by 2025. ARC Research estimates 400 billion, but I would note that these are pretty limited market sizes. For example, the Bloomberg estimate really is only focused on the experience aspect. So when you take, for example, the totality of gaming and media, which is going to be used to populate the metaverse. Of course, the metaverse, kind of like what Fortnite is trying to do, is going to be seeded with these types of huge uncapped experiences. That's going to be about an $800 billion opportunity in 5 years. But we think that the metaverse also includes relevant computing companies, relevant digital infrastructure companies. I think really the metaverse goes a lot deeper than just the experience layer.
Right, because you need that technology that drives the experience in the first place, right? Otherwise, you don't have it.
Yeah, exactly. Graphics cards manufacturers, they've pretty much all stated that the metaverse is a goal of theirs, and the computing power behind it is going to need to be immense, but you need infrastructure backing it for it to ever come to fruition at all.
Got it. All right, switching gears a little bit, why don't you tell us a little bit about Roundhill? What kind of firm is it? How big is it? And what is your role specifically, Mario?
Yeah, so Roundhill Investments is an SEC registered investment advisor with about $600 million in assets under management. Our business is primarily in launching thematic ETFs, so ETFs that track a specific sector of the market, and kind of investing in those particular sub-themes on behalf of our investors. And in return, through the ETF wrapper, we collect a fee. This type of thematic issuance has really grown, especially over the last 5 years. Firms like ARC, who have built a niche out in the space, have really expanded the opportunity for everyone to take part in it. And now my role in the firm is I'm the vice president of research, so I'm responsible for formulating a lot of our research, a lot of our content, and helping drive new thematic innovation by launching new products that we think our investors will love.
Got it. And real fast, what is your background? Do you come from Wall Street? Are you an analyst?
Yeah, so I have a buy-side background. After college, I spent a little over 3 years at BlackRock in the global fixed income group, mainly helping institutional clients allocate to fixed income, as well as working on the fixed income ETF side. So yeah, kind of still within that ETF realm, but instead of doing bonds, now I'm doing stocks, and instead of BlackRock, which is a pretty large firm, I'm now trying to help start something from essentially the ground up.
Great.
Awesome.
And so, Mario, when looking at the current composition of this metaverse ETF in terms of like constituent companies, one thing that kind of jumped out to me was in terms of the makeup. Like you mentioned Facebook, for example, but in terms of the number one holdings as part of the metaverse ETF, we see that Nvidia is number one, and companies that we would more normally associate with the ETF, whether it's Facebook or Roblox, are much further down. Could you talk to us about how this collection of companies was put together? And I know there's a relationship with this guy, Matthew Ball. So maybe you could provide us a little bit of background and context in terms of the makeup and how those companies were decided upon.
Yeah, and I think now is probably as good a time as ever to clarify our relationship with the fund. So we are the advisor for the fund, but we license the index from Matthew Ball, who is a metaverse essayist and strategist. I would argue probably the most well-known name in the metaverse space. And again, being cited by Mark Zuckerberg last week for his content. And he has an expert council, and which is essentially an index committee that is coming up with the names and the weightings for the securities that are in the index that we track every quarter. Part of that process involves allocating between 7 different buckets, which Matthew Ball and team believe are all components of the metaverse. And these are computing, networking, virtual platforms, interchange standards, payments, content, assets and identity services, and hardware. So depending on how the team buckets the individual companies that they track, and they track well more than the 50 companies that are in the index, they will come up with a weighting based on the subscores within each of the buckets that they're allocating to. So when you see something like Nvidia at the top, you can imagine either it was in multiple of those buckets and probably at a relatively high subscore.
Got it. Okay, so there's like some classification system that Matthew Ball has, and I totally agree with you. He's certainly the most well-known amongst people writing about metaverse and opining on the metaverse. And then, so is this some kind of licensing relationship where he does the stock selection and you guys sort of manage the fund? And is that the general relationship that you have when you are building out these sort of thematic ETFs?
So all of our thematic ETFs have been a bit different so far. In the case of this one, we're licensing, in exchange for, a sum of the fees that we're deriving. We're licensing the index, leveraging his marketing content, etc. Other of our funds have slightly different agreements, and this is kind of the first time we've done a first-party agreement where we're directly leveraging another individual or group of individuals to come up with the composition for one of our funds. We also have funds that we manage completely in-house. We come up with the index ourselves. So, for example, our ETF Nerd, which is the Roundhill Bigcraft Esports Index, we're coming up with that on a quarterly basis, retaining all the economics there. And then with something like sports betting with our fund Bets, the Roundhill Sports Betting and iGaming Index, we're doing the same thing on a quarterly basis.
Oh, interesting. I didn't know you had a relationship with Bigcraft. Coincidentally, Bigcraft is an investor in my gaming studio as well. So that's great.
Yeah, they were the VC that helped found the firm essentially after we launched Nerd, which was the first fund in 2019.
Okay. Steve, did you have questions?
Yeah. So let's see. Roundhill has a number of different ETFs, and I'm an ETF guy. I invest in a number of ETFs myself, mostly through ARK at this point in time. But you guys have a number of pretty interesting themes that you're working on. I was wondering if you could tell our audience what the benefits of investing in ETF are, generally speaking. Why would anybody want to invest in an ETF?
Yeah, so I think one of the biggest benefits is instant diversification. So when you buy into an ETF, you're instantly buying anywhere between 20 and 50 names within that portfolio. In the case of ARK, they do things a little differently where the funds are very active, not necessarily conforming to a theme, but in the case of ARKK, for example, all within the spectrum of innovation. When it comes to our thematic ETFs, when you purchase something like one of our sports betting ETF or our esports ETF, you know that all of those companies in that portfolio are going to have been vetted by us as being thematically relevant. So, in the case of Meta, you really don't need to go out and find 30 or 40 names that you think are going to be part of the future of the metaverse. You can buy the fee and buy the ETF in exchange for a 75 basis point fee. Will manage the fund for you essentially.
Got it. And does that include sort of updating the index, reweighting, and so forth?
Yeah, exactly. So in the case of Meta, the index is getting reweighted and reconstituted on a quarterly basis. And if something drifts in weight and Matt and his expert council deem that it continues to be relevant, it'll again be upweighted, and you'll kind of ensure that you're diversified across that basis as well, rather than names drifting too much within the quarter and not being on top of it and potentially having a misweight in your portfolio.
Got it. And you referenced a 75 basis point fee. How typical is that as far as ETFs go?
Yeah, so I think, again, it depends on what type of ETF you're looking at. I think for thematic ETFs, it's pretty typical. I would say anywhere in the 60 to 80 basis point range is what you typically see for thematics. And I think the slightly higher fee relative to something like a pure index fund that tracks the S&P 500 that you might get for a single digit cost is a lot of these thematics have the potential for greater growth. But of course, with that growth comes more volatility. But part of that more nuanced exposure is what you're essentially paying a premium for to the manager.
Got it. And speaking of growth and volatility, I have a question, which is how correlated are the stocks in the index right now? And are they supposed to become more correlated over time as the metaverse sort of grows into the opportunity and these companies kind of grow together? Because it seems to me that something like Nvidia and another stock, Roblox, both of which are fairly high up in the index, are not necessarily correlated very much right now.
Yeah, I think they're all related to the theme or the sector rather of the metaverse, but they're more correlated within their individual buckets. So I think when you take a look at something like the experiences in media, which is what companies like Facebook and Roblox are driving at, I think those have the potential to be more correlated. But then when you look at graphics card manufacturers like Nvidia and AMD, which are in the index, you have correlation there as well. So I don't think the correlations within all 50 names that are currently in the portfolio is super high, but I think within those individual subsegments, you do have correlation. But part of having the approach where we have the 7 different buckets that constitute the index is that you are diversified on a total basis when you think of the entire constitution of the index.
Got it. That makes sense. And as the metaverse opportunity expands, one can imagine, Nvidia's revenue deriving more and more from metaverse-like opportunities. I mean, right now, they're making GPUs and increasingly machine learning, type chips, but that could change over the next 5 years. Kind of what you're getting at, right?
Yeah, and in Nvidia's case, I think they're one of the most interesting companies in the fund and the index because for them to pivot into the metaverse, it's not necessarily a total change of strategy, but it's something more organic because they already have the computing power through their GPUs to facilitate these very, very large virtual worlds. I mean, when you think about enthusiast gamers and the cards they're using, it's almost exclusively dedicated GPUs from either Nvidia or AMD. So these companies have really honed in on this strategy of high computing power, having the GPU be a standalone instrument for compute versus relying on something like the CPU, which is also where you see opportunities in blockchain and mining.
Mm-hmm. Got it.
And Mario, when it comes to the Metaverse ETF, do you have any specific performance expectations? So you mentioned ARK before, and with ARK, they set, for example, a 5-year time horizon and specific targets with respect to return. Is there anything like that from you guys with respect to the Metaverse ETF?
No, there's no target for us with respect to return. I think when it comes to all of our themes, we do think that they're all driving innovation, and they're all going to be part of the future economy heavily, much more than they are now. In the case of something like esports or sports betting, but it's really hard for us to look forward and say, oh, this is going to return 20% or this is going to return 30%. I think it's really hard for any asset class to say, we're expecting a 30% CAGR. I think if anything was guaranteed to return 30%, it would be super saturated and the valuation would be so stretched to the point where you're probably not going to get that return as a public investor to begin with.
Right. Given some of the ambiguity with the metaverse, do you have, would you recommend that that some of the investors in metaverse be more longer term? So, for example, let's take Tesla as an example. Long-term holders of Tesla are obviously super well rewarded, and the theme against electrification, transportation as a utility, and some of the stuff that Tesla was doing was absolutely correct. And Tesla saw like an early pop in 2013, but then was like range bound until early last year, right? And so for a metaverse ETF in which there may be, sudden spiky sorts of, developments, do you worry that in some cases, because it's so hard to predict, that the people that do hold the metaverse ETF should be more longer term holders, or do you expect more of a gradual, steady kind of, increase in terms of the names that are being held?
Yeah, and I think, again, one of the benefits of an ETF is that you remove some of that idiosyncratic risk. Like, let's say you're holding only Facebook and something happens there and they drop the ball and completely exit from any metaverse-related developments. You're going to have another 49 names in the fund with which to kind of back up and take its place. And again, part of the benefit with the ETF and the index is that the committee is assessing these decisions every quarter and ensuring that it remains relevant to the metaverse sector over time. But that being said, certainly the metaverse is going to take a number of years to come to fruition. I mean, it's still extremely early innings. You think about a game like Roblox, for example, they've made leaps and bounds with their capacity limits within their reality engine. I remember when I used to play, like almost 15 years ago now, they could only hold 12 people in a server, and now it's up to 700 in the beta. Well, the metaverse is going to require millions of concurrent users simultaneously, and you're not going to have that overnight, and you're not going to have that within 5 years. But within a decade or two, I think you're going to get a lot closer to a place where you see a lot of the objectives currently outlined for the metaverse come to fruition. So I think when you think about the metaverse in its totality, and you think about the ETF, you're certainly going to need to adopt a long holding period to see the theme fully build out.
Right. And just to kind of go back to one of the points that Steve asked you about in terms of the advantages of kind of buying into the metaverse ETF, would you say that the main advantage is really around convenience because you guys are updating the names and, versus like an individual or retail investor just having to go and, like replicate your ETF and kind of, having to manage and update those, like whether it's 25 or 30 names? So is the main advantage around convenience, would you say, or are there any other advantages?
So I would say first and foremost, the main advantage is leveraging Matthew Ball's expertise and his expert counsel. I think that type of thought leadership is very much proprietary, and that kind of reflects in how the index is constructed itself. I think it definitely is an advantage, though, that you are that diversified. You are holding names from a number of countries, and all of those names are getting traded quarterly to bring their weights back in line with what the expert council has as their expectations. You think about the geographic breakdown of Meta right now, we're 76% United States, 10% China. The rest of the balance is mostly in other Asian and European economies. As a US investor, it's very difficult to invest in those, especially at small size. If you look at international trading on your brokerage, the lot sizes that you need to execute at to avoid disproportionate fees are really high. And part of that convenience is that our fund Meta right now is trading at a net asset value of $15 or close to it. So with just $15, you can buy one share, allocating proportionally across all of these names and simultaneously leveraging the expertise and thought leadership of Matthew Ball and his team.
Okay. And then I just have one last question, which is internally with respect to the performance of the ETF itself as a vehicle for you guys. Do you guys have any sort of targets with respect to how well subscribed the ETF becomes, and what has been the early feedback in terms of the ETF itself? Like like what kind of feedback are you getting so far?
Yeah, so we could not be happier with the initial feedback that we had. The fund has grown from seed, which was $1.5 million, to just about $40 million as of today in less than a month. And that's driven entirely or almost entirely by retail investors putting in tickets to their brokerage under 300 shares. So we're really elated with how normal individual investors have bought into and subscribed to this product. I think one of the good things about an ETF is that we don't need a certain capacity to execute our strategy, because the way the ETF ecosystem works and the way in-kind redemptions and creations work with the authorized participants that underlie the entire ETF ecosystem is that we can execute our strategy at 1.5 million, we can execute our strategy at 40 million or 400 million. And there's not really a threshold that prevents us from doing our job effectively.
That's interesting. And on top of that, you get to do it in a pretty tax effective or efficient way, correct? That's what enables you to rebalance quarterly. Yeah,
the ETF structure is just inherently tax efficient. On the whole, more tax efficient than mutual funds. All you have to do is look into the average capital gains doled out by mutual funds and the average capital gains paid by ETFs on an annual basis, and you'll find that ETFs in the aggregate are more tax efficient. Again, just due to their structure. I won't get into the particular nuances of why, but just the ability to create and redeem with the frequency that ETFs are allowed to do so, and without affecting the market value of the individual constituents or having to raise cash by selling down the individual holdings, is something that's massively beneficial to ETF investors.
Right.
And Mario, actually, I did have one other additional question. So when you spoke about like this specific ETF having a larger retail audience, could you speak to that? Is that based upon the theme? Like, is this typical in terms of the makeup of institutional versus retail? And then how would you market this ETF different from another if this is more retail oriented?
So I think part of it depends on the firm and their strategy, and another part depends on the actual composition of the product and the marketing of that product. I know my experience with iShares, and this is on the fixed income side, and fixed income is definitely more institutional than retail, but we would see about 60-40, with the 60 being institutional. At Roundhill, when we look at the 13Fs of the firms that are, of the large firms that have to report their holdings on a quarterly basis, we see that only about 5 to 10% of our entire asset base is institutional. So I think this type of thematic revolution, as we like to call it, has been more driven by individuals as a whole. And then with something like Meta and the Metaverse ETF, I think individuals really understand the appeal of a product like that. And it's also individuals who kind of subscribe to Matthew Ball's thought leadership and believe in the future that's being built out. I think it's hard for institutions to grasp, exactly the moment, like what Fortnite means or what Roblox means for the overall metaverse ecosystem, but individuals who are like playing those games or have kids who are playing those games can really gravitate to it and just see how powerful games like that are.
Right.
I remember looking at flows into video game ETFs, and I'm not saying that is a video game ETF, but for a fund like Nerd, for example, flows on aggregate to video game funds versus broader ETFs lags on about an 8-to-1 basis. And part of that is because institutions don't understand that a lot of these games and these experiences are super profitable, even though the numbers are screaming out to them. So part of it is going to require institutional education, but we couldn't be happier with the amount of retail adoption we've had.
Yeah, you're kind of part of that democratization of markets story, along with Robinhood and so on. You guys are pretty new, so I don't know if you have insight into kind of where those retail orders are coming from, but it wouldn't surprise me to learn that you're getting a lot from that direction because there is overlap between Fortnite players, Roblox players, and Robinhooders, right? Kind of folks in their 20s.
For sure. I mean, Robinhood, the median age is somewhere in the 30s. The average account size is like in the hundreds rather than the hundreds of thousands with large brokerages like Fidelity. And you also have other brokerages coming up like Public, which are solely geared to individual investors. And I think this is just all part of a broader revolution that, you could almost say that the climax was in January and February with the pop that stocks like GameStop and AMC had in retail investors feeling empowered and being able to see their trades actually reflect in market conditions.
Wall Street bets, baby.
That's
taking it to the big guys.
Absolutely exploded. I mean, they have like 10 or 11 million subscribers now. It's such a big number. It's massive.
It's extraordinary. And I think that correct me if I'm wrong, but I think there are a few ETFs coming around that are kind of like playing on that type of momentum trade, across social media, which is fascinating.
No, there certainly are. And I can't give away too much, but you can watch us.
Watch this space.
Along those lines. Yeah, watch this space.
That's awesome.
All right, Mario, I think those are all the questions that we have. Do you have any final message to the audience in terms of the Metaverse ETF? And how can people get in touch with you if they wanted to reach out to you?
Yeah, so I'll get into the contact information first and foremost. You can, if you want, reach out to me directly. My email is mstefanidis@roundhillinvestments.com. It's kind of a mouthful, but I'm sure you'll have my last name somewhere in your description or title. Mm-hmm. And for more general questions, you can reach out to us at info@roundhillinvestments.com. And, I think what you guys are doing is so great in like empowering retail investors with podcasts like this. A lot of media has cropped up in especially in the last 2 years, just targeting this demographic. And this demographic is going to be super influential and super powerful. Gen Z and millennials, it's not going to take a lot of years for them to hold the majority of wealth. And I think it's going to be really interesting to see what direction they choose to go with that wealth. Are institutions like private equity or hedge funds going to continue to exist? Or is the strategy going to have to completely change to adopt to these new trends? What you guys are doing is awesome. And, when it comes to Meta, you can find us on your favorite brokerage of choice. We have a list of all the brokerages that it's available on roundhillinvestments.com/ETF/Meta, as well as some research from our side and a link to Matthew Ball's website where you can find just a whole host of essay content. But be ready to read because I know his latest piece was about 30,000 words.
Whoa.
We'll put all those links.
He broke it up into 9 parts, and it's an excellent read, but you may have to break it out into a number of days.
Wow. Thought leadership takes a while, as it turns out.
30,000 words. It's massive.
Okay, Mario, thank you so much for your time. And for the audience, we'll catch you next time. Thanks, Mario.
Thank you.
Thanks, guys.